What's going on, guys? Welcome back to another Bitcoin weekly update. The date is December 10th, 2018. Let's take a look at what happened last week. So if you guys watched our last weekly update video, we were pretty much spot on. I just didn't predict how low this bottom would actually go. The level that we were looking at last week was this 36.37, around 36.40 level. And we saw a clean break of that level, or excuse me, 38.60, and then we were looking at targeting the 36 level. And we saw a clean break of the 38.60 down to the 36 level, but it just didn't stop. It did not find support there, and it kept crashing down to 32. And we basically saw a perfect test of this lower range of the order block at 32 even. After it bounced off the lower range of the order block, it popped up right back to that level, 36.40, almost to the dollar. What is the high there? The high is 36.30, so missed the high by about $7, about as close as you're going to get. And then we basically rejected and fully retraced. This is today's candle. It just closed right as I started the video, and it was basically a perfect match of yesterday's candle, just in reverse. So that is pretty bearish. We probably will see a retest of this 3200 level. If we do not, it might pop up and try to test this 3640 or the 12 EMA around 3680. So that is our resistance, our close resistance here. If it breaks through this resistance in the next day or two, your next level that you're looking at is the 3860 once again, and then the 4K, obviously psychological number. Once 4K is broken, same levels as we had the past few weeks, 4160 and then 4450. I highly doubt we'll get to those levels here in the next week. So we'll talk about those levels probably in the next weekly update video. But let's take a look at the weekly candle here. Let me get rid of all this. So the weekly, pretty ugly. Obviously we saw the massive failure in the beginning of November, and then we had a small recovery towards the end of November. Then we had another failure in the beginning of December, and now we're starting to see a continuation of this last week's candle. We have not retraced really at all on the weekly. The weekly opened at, let's see, 35.26, and we're currently around 3,400. So we haven't retraced at all. So what I'd like to see for this next week's candle, I'd really like to see a break of the high here of 36. I'd really like to see a pushback towards the 4K resistance, and then a recovery towards the 12 moving average. Obviously, this 12 is very, very far away at about 55. If the next week closes, it will probably be closer towards like 5,000. So I'd like to see a retrace towards that level. If we don't see that, we're still looking at some support down here at around 3K. That's our biggest level of support below price. And then if that is not, if that doesn't hold, 2,500 is a pretty standard support level there. Another thing I wanted to show you guys here is the long to short ratio. We've gone over this a few times. This week has been pretty scary for shorts because we saw a basically an all-time high for shorts. Let me pull it up here. You can see the shorts here was, I believe, at an all-time high around 42,000. I don't think the shorts have ever been that high. So the shorts were very, very extended, but we didn't really see a short squeeze. We saw a pretty strong bounce. Let's go back to our first chart here. We saw a pretty strong bounce off the bottom around 32, back up to like 36. I wouldn't really consider that a short squeeze, though. It wasn't volatile enough to be a short squeeze. If we see a proper short squeeze, we're most likely going to see a very volatile candle back towards like 4K or towards like 4,400, but we just haven't seen that yet. But what I'm looking at currently is a very biased ratio here, almost 0.75 leaning towards the shorts, obviously. The spread is around 10,000. Right now it's at 9,000, about 200. We have not seen a long spread since, what is that, November 19th. So we've had a positive short spread since November 19th. And the spread is very, very high. The highest it ever was for the past week was on December 7th. We were at around 14,000 difference, meaning there was 14,000 more shorts than longs. That is very scary for shorts. I typically don't like to be shorting when there's over like a 5K to 7K difference. And same thing for longs. I don't like to take longs when there's a 5K to 7K difference, leaning towards the long side. I also consider this like the danger zone when we're below 0.8 on the ratio, and we are at 0.75, so we're still in kind of that danger zone. By danger zone, I mean the area of which it can easily turn into a short squeeze. Like here we saw the shorts get annihilated pretty much, and we saw it there as well. We saw it here as well. You can see as it gets below like 0.8, you get into that danger zone, and the shorts get very scary. Another thing I wanted to show you guys before we end the video is if we look at our 3-day outlook on volume profile. So all you have to do is put on volume profile, throw on VWAP, and then just have the candlesticks. And what I'm looking at here is if you look at 3 days, 72 hours worth of data. Let me see, I think I have 4 days here. I have 4 days here. Let me drop a day. Okay, so right now we have 3 days worth of data. So what I'm seeing here for the past 72 hours, we see a clear bearish day here. Price is trending below VWAP. This red and green line is VWAP. Price is trending below VWAP here. And then the next day we break above VWAP. We're trending above VWAP on this day. And then we see another bearish day here where we're trending below VWAP. Okay, so now what are we seeing on the profile? I'm seeing a strong resistance point here at around 3,500. I'm also seeing a strong support and resistance on POC here around 3,400. I'm also seeing a small gap around 3,450. You have another small gap around 3,350. You can see that gap was tested here. We have a big gap here at 3,309. These are the levels that I'd be looking at. Oh, one more level that I forgot. You have a strong support here around 3,330. So you could look to take a long around this 3,350 to 3,330 range if that looks like it's going to hold. But since it was already tested right here, it's probably going to get broken through down to that gap around 3,300. And then if that 3,300 gap doesn't hold, we'll probably test this gap around 3,270. And you can see here, another thing that I called out on my Discord, I think I talked about this in the last update video. I showed you guys this pattern of this lower high structure, almost a double top we were forming on the hourly. You could also see this on most of the macros, the higher time frames. What I was looking at, the red line here was the weekly high. This was the weekly equilibrium, and this was the weekly low. And I was calling this out in Discord. It broke the equilibrium, retested the equilibrium, and then we were failing. So the target was the weekly low. You could take a long off the first test of the weekly low, and then target like equilibrium or target the high. What had happened was, you can see here, it bounced off the weekly low, instantly pumped up to about, what is that, around 3,800, so about $200, nearly 10%. And then we rejected the 12 moving average and then rebroke through the weekly low here. And then we saw a clean test of the weekly low here, and then we failed again. So this is very bearish that we broke through the weekly low and then we retested it and failed. What I do like is the 12 moving average here on the 4 hour is starting to turn green. We are also looking Morningstar on the weekly low here. Those are the things that I'm looking for. As I'm making this video, you can see how we're kind of in a bearish pattern here, still below VWAP, rejecting POC, heading towards these levels down here. So we probably will see a retest of that lower 3,200 range before we head higher. If this lower 3,200 range breaks, let's go to the weekly here. As I was saying, you want to be looking for that 3,000 support, and then if 3,000 does not hold, that 2,500 to 2,000 range. I really don't think we'll get that low, but I honestly didn't think we'd get down to 3K. So we could easily go down to 2,500 or 2K. So just be prepared for some more carnage. We could definitely see some more downside. Also be prepared for a short squeeze because the shorts are incredibly high. And if the volume comes in on the buy side, we could really be seeing a short squeeze pretty soon. One thing I did want to point out here was a massive bull div that we had on the MoMo. You can see here the MoMo made a higher high, or excuse me, a higher low, while the price made a lower low. This is a bull div. What is preventing this bull div from playing out is the volume. We don't have a lot of buyers here. If the buyers come in, this bull div can play out, but right now it kind of looks like the bull div is going to fail. We don't have enough buyers, and it's getting ready to break the low of the bull div. You could also see this bull div on RSI or MACD, but it wasn't as clear. So that's it for our weekly update. I will be making another one next week, probably around Sunday or Monday. So I'll see you guys then. If you guys like the video, please don't forget to subscribe and give it a like, and I will see you guys next week. See you later.